Hi everyone, we're going to talk about ETFs today. So exchange traded funds, that is what an ETF is. So just to start with, whenever you have a question, we've all told you, right, to go to investopedia.com. That's a great source. There are other sources out there, but this one is wonderful. And you just type in ETF, right? And then you come down here, your first pop up here is exchange traded fund ETF. What is an ETF and how to buy them? So let's just click on there and see what it says, right? So it tells you a lot of information. So this is a great resource, and we're going to go through this so you understand it. So an exchange traded fund is a type of security that tracks an index, a sector, a commodity, or another asset, but which can be purchased or sold on a stock exchange the same way that a regular stock can. So if you know stock tickers like Apple, AAPL, an ETF just has a regular ticker just like that, and you can buy it on an exchange. So an ETF can be structured to track just about anything, from an individual commodity to a large and diverse collection of securities. So ETFs can be structured to track investment strategies even. So a well-known example, of course, is the SPDR, the S&P 500, the SPY. So when you hear people talking about the futures like the ES, the S&P 500, the NASDAQ, the YM, which is the Dow Jones, the IWM, which is the Russell 2000 small cap, right? Well, they have the ETFs that track those as well. So for example, the ES, which is the S&P 500 futures, is tracked also by the SPY. So you can buy and sell the SPY, which is an ETF, right? So it can contain many types of investments, including commodities, bonds, mixture of investments. They have ETFs out there that are like for moderate risk tolerances, which is 50% bonds and 50%, equities. I mean, they have ETFs for everything these days, you guys, everything. So what are the key takeaways? An exchange-traded fund is a basket of securities that trade on an exchange just like a stock. That's the important part. The ETF shares prices fluctuate all day as the ETF is bought and sold. This is the difference from a mutual fund. Mutual funds only trade once a day after the market closes. So you can't be day trading mutual funds. That does not work. ETFs can contain all types of investments, including stocks, commodities, bonds, some other U.S. holdings, while others are international. So what does that mean? It can hold stocks and commodities. Well, there are some ETFs which are leveraged ETFs, right? How do they get leveraged? They use commodities. They use options. They use different things inside of the ETFs, right, to accomplish that. ETFs are a lower expense ratio and fewer broker commissions than buying the stocks individually. So what that means is, for example, the S&P 500 is 500 stocks, right? 500 large cap stocks. If you were to go out and buy all 500 of those, how much money would you need? You'd need a lot of money just to buy one share of all 500 of those companies. So the SPY allows you to buy just a little tiny fractured piece of all 500 of those companies for a very reasonable price. It's the only way you can accomplish that, and that's really why ETFs were created. Because if I want to own the whole basket, I don't want to, spend $10 million to own a little piece of the SPY. This allows you to do it for, a few $100s. So an ETF is called an exchange-traded fund since it's traded on an exchange, just like stocks are. The prices of ETF shares will change throughout the trading day as the shares are bought and sold on the market. This is unlike mutual funds, which are not traded on an exchange, and they trade only once per day after the market close. It says ETFs can be more cost effective because ETFs do have an exchange fund. Usually the ETF expenses are very low compared to the mutual funds, which can be, cheap, or they can be very expensive. So you really have to check fees, right? Okay, so an ETF is a type of fund that holds multiple underlying assets rather than only one, like a stock. Because there are multiple assets within an ETF, they can be popular choice for diversification. So an ETF can have hundreds or thousands of stocks across various industries. Like I said, there is an ETF for everything. For example, you have a banking-focused ETF, which contains stocks of various banks across the country. So what are some of the more popular ETFs, right? You have bond ETFs, which can include government bonds, corporate bonds, state and local bonds, municipal bonds. You have industrial ETFs that track particular industrials such as technology, banking, oil and gas sectors. You have commodity ETFs, which are investments in commodities, including gold and oil. A lot of you've probably heard GLD, that's an exchange traded fund for gold. Currency ETFs, which invest in foreign currencies such as the euro or the Canadian dollar, makes it a lot easier to trade, right? The euro and the Canadian dollar, if you're not familiar with Forex, instead of having to go into the Forex world, you can actually buy the ETF for them. You have inverse ETFs, which attempt to earn gains from stocks' declines by shorting stocks, short selling stocks expecting a decline in value and repurchasing at a lower price. These inverse ETFs do some of that for you instead of you having to go and short the individual securities. There's exchange traded funds for everything. Okay, so we won't get into the notes too much, but you can come in here and read more detail. That's the basics of what an exchange traded fund is. But let's get into a little bit of examples. Here are some good examples because you've probably heard of some before, even if you're not familiar with them. So what are real world examples of ETFs? The SPY is the exchange traded fund for the S&P 500. The Russell 2000, the IWM, tracks the Russell 2000 small cap index. The QQQ, it tracks the NASDAQ 100. So the Spider Dow Jones is the DIA, represents the 30 stocks in the Dow Jones. What are some other individual securities sector ETFs? You know, it's important to know your sector ETFs. So oil and gas can be OIH. Energy is XLE. Financials are XLF. REITs are IYR. And this is just one example. Biotech is BBH. There are different companies, right? ETFs got popular, so different companies started packaging them. So you might want biotechs, and that doesn't mean that you go out and buy BBH for the biotech ETF. There are probably 10, 15 different biotech ETFs out there. So how do you know which one to buy? Well, I'll show you how to see what's inside of them so you can kind of find one that you're interested in. But commodity ETFs, you can, trade crude oil through USO and natural gas through UNG, right? Why would you do that? Well, if you go out and try to look for a futures contract for USO for crude oil, it's extremely expensive and extremely leveraged, and you have to put up a lot of margin. And it's very risky, right? To a certain extent, if you don't know what you're doing, you can really crush your account. Whereas USO, you can go put a few $100s in, and that's all you're risking. That's all you have to worry about. You don't have to worry about having a margin call. So physically backed ETFs like the gold, GLD, and the silver, those are very popular. So advantages and disadvantages, we won't go through all of these, but a lot of it has to do with one's managed, one's not managed. Something that's kind of newer is actively managed ETFs. So, what does that mean? That means instead of just having an index that it tracks, there's a manager that's in there buying and selling. It's kind of like, if you think about it, like a day trader in there with a bunch of people pool their funds, right? You have a big pool of money, and somebody's in there actively managing, buying and selling, and doing whatever they think they need to do to get you a great return. An example that you've probably heard of an actively managed ETF is ARK. ARK funds, ARKK, RKF. Those are actively managed ETFs. Okay, so it goes on and on, right? You can have dividend ETFs, index ETFs. It goes and gives you all the information you need to know about ETFs. So let's show you what else this site does, though. This is Investopedia. My favorite site for looking up ETFs is actually this etfdb.com. Okay, it's etfdatabase.com. You come on here and you click on the little find button, and let's just see, right? Like any ETF, QQQ, okay? So what is QQQ? What is in it? How do you know? So you can go in here and you can actually look at holdings. It's kind of important to know what the top holdings are inside of the QQQ, right? So you can see Apple and Microsoft and Amazon and Tesla and Google and Facebook and, NVIDIA, PayPal, Comcast. So these are all the most popular, different types of companies that you've heard of. Now, if you're a longer term investor and you want to own all of these things, you know how much Apple's trading for, and Microsoft, Amazon. My goodness, how much does Amazon cost you? And Tesla shares and Google shares, right? It's hard to afford to buy all of those. So if you buy this exchange traded fund, you could put $5,000 in here and you have a nice little chunk of Apple and Microsoft and Amazon and Tesla and all of these other names. So that is the QQQ, but let's go and look at something like what is XLK? Why is there an XLK technology when you already have the QQQs? Well, someone decided that they wanted to have the technology sectors, but they didn't, for some reason, like Amazon. So XLK does not have Amazon in it. Okay, so that is one thing you'll never see in here. But, some different top holdings in here, right? Let's just say you heard about something, I don't know, like an ARC fund, and you want to come look it up. Like, what is ARC Innovation? Okay, you can read all about it. It gives you more information than you'd ever want to know, but you can look at the holdings, and you can see what are the top holdings in the ARC fund right now. Well, by far, it's Tesla. That is their number one holding. Then they've got Square, they've got Teladoc, they've got Roku, they've got Zillow, right? You go down the list. Okay, if you really are interested in following Kathy Woods, you can go to her website actually and request trade updates every day. But this is how you would follow some people. Like, you might come across people that you really respect who are professional traders, and they have their own funds, and you can follow them in these ways. You can see what their top holdings are. So I really like to do this. And why are exchange traded funds important? So I like another site here called FinViz. You've probably all heard of it. If you go to the maps section, you can kind of see what's moving, right? And this is different sectors. Sectors are important. What are sectors? You have the technology sector. You have the consumer electronics, the financials, the communications, semiconductors, right? Information tech. It breaks tech into different sectors. The banks. Financials can be broken into several sections, like insurance and asset management. So communication sectors, right? Entertainment, telecom, drug, healthcare, biotechs, medical devices, medical instruments, consumer cyclical, automobiles, restaurants, footwear, energy, utilities, basic materials, aerospace, industrials. If you're going to be a trader, it's important to know the sectors. Why? Because depending on what's going on in the market, believe it or not, there is more than just technology. And you need to know what sectors are kind of hot at the moment, what sectors are overheated, what sectors, might be like right now. It's a good example, right? Technology has been on fire. So it's actually been having more of a pullback than a few other sectors, right? So what sectors have been doing good lately? Well, the healthcare has been doing pretty good. Industrials have actually been doing pretty good. Basic materials have actually been doing pretty good. And a year ago, those weren't doing very well, right? So you want to know what's going on in the overall markets, and this is a good way to know. Look at these, this heat map. So you come on here and you say, oh my gosh, look at all the green and utilities. Wow, utilities are actually doing really good right now. That's interesting. Or maybe you're not interested because you're bored to death with utilities. So you see, oh, look at you industrials. Look at all the green in industrials. So it's just an example. So you want to say, okay, what's the ETF for industrials? Well, first of all, you love Google, right? So if you don't know what the ETF is for industrials, put in ETF industrials, and then always put in ticker, because it'll give you too much information, right? So what are some tickers for the ETF industrials, right? You'll see IYJ, you'll see different, VIS for Vanguard, XLI. That's probably one of the most popular ones, XLI. But you can also go back to your handy ETF database and search, right? There's this whole database right here. It's going to have every ETF that they known to man, right? But come in here, say, okay, XLI. Look at there, industrials. You can also just type in industrials, I imagine, and it will start pulling up, a bunch of different stuff for industrials. And there you go. And since it's an ETF database, right, it gives you a lot of ETFs. But let's say we want to look at XLI because that's one of the biggest and most popular. Okay, so we pull up XLI and we look at holdings. and there you go. Honeywell, Union Pacific, Boeing, UPS, Caterpillar, RTX. So that's what an ETF is. All it is, it's an exchange traded fund. It is bought and sold just like a security is. So honestly, let's go to, I use Thinkorswim here, so let's just go to Thinkorswim real quick. You know, we have QQQ pulled up. You can chart it just like a regular stock. You can actually buy it just like a regular stock, right? It trades just like regular options. If you're familiar with options, you can buy it like a stock, or you can trade options on it. So you just come in here and you treat it like anything else. Right now, QQQ is selling for $318.83 per share. So if you bought one share of QQQ, you'd spend about $319, right? And you would own a little fraction of all of the different companies that are in the QQQ. So I hope that explains to you what ETFs are and how they're traded. And when you do scans, for example, in any platform that you have and you're scanning for stocks, you'll probably see ETFs come up and you won't even know they're ETFs, right? You'll click on some tickers and then you'll find out, oh, that's an ETF. So you can exclude ETFs from your scans if you like, if you're looking for just individual securities. But as you can see, the most popular ETFs also trade options. So if you're thinking the QQQ, the NASDAQ is going to go up today, and you know it's been really beaten up, and you want to buy the NASDAQ, then you can come in here and trade some options on it if you'd like. Or if you think that it's very overvalued and you're wanting to short the NASDAQ, short the Qs, you know, how do you do that? Well, you can come in here and buy puts. So anyway, that is exchange traded funds. I hope that helps. And just remember, anytime you have questions, Google and Investopedia are your best friends. And free sites. You can almost always find the information you need on free sites. Pick a few, find a few you like, stick to those so you don't get too confused skipping around to, because trust me, there are thousands out there. All right, thanks.